One of the other options we have is to, of course, edit existing things. And I do this on occasion because sometimes the terminology that QuickBooks used just isn't the terminology I would use. In this case, as I'm looking down my list, I notice that they have an equity or a fixed asset account called Furniture and Equipment. I actually, as a computer company, want to keep my equipment as a separate category. So I want to simply edit the name of this account. Accounts can be edited by simply right-clicking on them and choosing Edit Account. In this case, the only change I'm making is I'm going to take off the End Equipment, so I'll just use my backspace key. And of course, I would want to edit the description as well. Take that out. Notice it says with a useful life exceeding 1 year because it is an asset, a fixed asset. There we go. Now at the moment, there is no tax line assigned. I'm going to go ahead and click on the drop down, and I'm going to put this down as maybe office expenses. Then I'm going to click Save and Close. Now the reason I did this was because I purposefully wanted to put in an account that wasn't really appropriate. What QuickBooks is telling me is that the account was currently signed a tax line that's not compatible with the account type. In other words, it's a fixed asset. And a fixed asset should not have a Schedule C line that's for expenses. So this is okay. What it's going to do is allow me to say okay, and it will actually keep that even though it's an error. My recommendation is if you see that, you should fix it now. You don't want to let that go and maybe miss it when it comes to tax time. So I'll go ahead and right-click and say Edit the Account. And if I'm not exactly sure what to do with that because I haven't talked about assets yet, then you do always have the option at the top of the list to say it's either unassigned or not tax related. There is, of course, a big difference. Unassigned means I don't know what tax line to put it on. Not tax related means I'm not going to count it as part of my taxes. So I will choose unassigned. The next thing I want to do is use this button called an opening balance. Since I'm starting my company from scratch, or at least from the beginning of the fiscal year, I may already have this asset. Let's say that it's a desk, and the desk was purchased for $600. I need to have that as a valuable piece of furniture that my company owns. It's part of my balance sheet. By clicking Opening Balance, I can simply put in the value of the assets. I will put in an opening balance of $600, the purchase price of the desk. And the date should be before the QuickBooks start date. Notice it says if your business did not own the asset before your start date, click Cancel and use a transaction to put money in this account. Well, we're going to go ahead and put in a date anyway. I'm going to put in the end of the last year. Once I get those two pieces of information entered, I'm going to click OK. But I do want to tell you something. While this feature certainly works and seems easy, you need to be careful. Accountants will assure you that this is not correct double entry accounting because actually we're creating only one side of the equation. Accountants and GAAP would prefer that we take a general ledger entry, which we haven't talked about yet, but somebody would make a general entry so that both sides of the transaction are shown and so there's also an audit trail. At the moment, what we're saying is we have a $600 asset, but we have no way of showing you how we got it or where it came from. I think you're starting to see the whole purpose of the double entry system. I did want to show you that this is an option though. We'll click OK. Notice that it gives us that information here, and then when we save and close, it gives us a couple more warnings. I love that QuickBooks tries to make this easy for us and tries to prevent us from making errors. It already told us about the error with our tax line mapping. Now it's talking about a transaction. Sometimes we have typos and we accidentally enter the wrong date. In this case, it's simply warning me that this transaction is more than 90 days in the past, and it's saying, are you sure you want to go ahead and do that? I'll say yes. Then we get back to our chart of accounts. We can see that the name is changed. It's no longer Furniture and Equipment, but just Furniture. It is a fixed asset, and far over on the right-hand side, we have a value of $600. So we can add accounts to the chart of accounts. We can certainly edit them. We can also delete them. Watch what happens, though, if I try to delete the Furniture account. If I right-click and try to delete the account, QuickBooks tells me that I can't do that. There is a rule, and it makes sense if you think about it, that if you have any transactions on any one of your entries in QuickBooks, you can't actually delete it. In other words, if I have a $600 purchase of furniture, then I shouldn't be able to just erase that like it never existed. There's those accounting rules again. And of course, it makes sense. What I can do, however, is I can make something inactive. And that's what QuickBooks is telling me here. It can't delete it, but it can make it inactive. If it does make it inactive, then it simply won't show up by default on the list. I'm going to cancel because I don't want to do that, but I did want to show you at the very bottom of the screen, if you have inactive accounts, there is a checkbox that will become available that will show the inactive accounts. Otherwise, they don't appear. Well, let's show you something that I actually can get rid of. Let's see what we have here that we don't necessarily need. I don't charge for freight and shipping, so I'm going to delete this account by right-clicking, deleting the account. Because it does not have any balances or transactions on it, it's going to allow me to do it, but it just says, "Are you sure?" I say OK, and away it goes. Just one last thing that I want to do is I actually see that I have a telephone expense. And again, QuickBooks has tried to make this the best that it can, but I do my books a little bit differently. I actually include my telephone expenses as a subcategory of utilities, not as a separate expense. So I'm going to right-click, go in and make another edit, and this time I'm simply going to create it as a sub-account. Even if you have transaction on an existing account, you can always come in and either take it off of being a sub-account or add it to a sub-account, just like I'm doing now. You simply need to choose the parent account and save and close, and now you'll see telephone expenses is a subcategory underneath utilities, just like my different types of training were.